you understand the rules when you're trading price action? Do you know what to do when it comes to price action trading? Are you trading it correctly? I've been doing this for 30 years. And I'm going to show you in the charts today the best strategy that you can use and the rules that will apply when you're trying to trade in a price strategy sort of scenario, or when you're trading with support and resistance, supply and demand, trend lines. It's all about the price action. It's all about which way the price is going, the trend of the price, and all these fancy things that you need to know when you're trading price action in the stock market, Forex, commodities, futures, whatever it is you're trading, guys, the same applies. I had someone tell me that it doesn't work for futures. Believe me, it does. Because what trading is all about is being a soothsayer, being a fortune teller, because what you're doing is you're predicting what's going to happen next. You're predicting what's going to happen next in the market so that you can be profitable, so that you can take home a profit. So this is not about sort of it won't work here or it won't work there. How can it not work anywhere? You are predicting the future. You are looking at what's going to come next. We actually think that things are not going to work because we have these limiting beliefs in our minds. And that's what causes us to have a situation where we think, oh no, it won't work for that because I've been doing this for. Guys, these things all work, all the strategies work. And as long as you understand that the market's a 50-50 game, as I tell you in every single video, I tell you the same thing. And do I have to explain myself again? 50% of the time, when you take a trade, you could win. And 50% of the time, when you take a trade, you could lose. It's simple as that. The point is, we're going to show you some price action rules in the charts now. And we're going to show you how you can trade and actually make a profit in the stock market, Forex, trading, commodities, whatever the case. Wow, that was a loud car that went by. Maybe you didn't hear it. I don't know. Hopefully not. Before we go to the charts, guys, don't forget trading is risky. And if you don't like risk and you don't like losing money, don't trade. Don't trade. Don't trade. Don't trade. Because if you don't like losing money, there's a good chance that you're going to become emotionally wrecked. You have to learn to lose. You have to learn to lose in the stock market to be successful. But before I ramble on too far, when I come back from the charts, we'll talk about your free gift and we'll talk about why trading is a 50-50 game. But let's go and have a look at the charts and let's go and see how you can trade this price action with some rules. The price action rules traders are hiding from you. And what are these rules? Well, let me tell you something about price action. There are very few, if not no, rules to price action. You can trade price action any way that you feel. Okay, the basis of it all is look for the trend, see which way the trend is going. Now, this is a lamp pole formation. This has gone so long. This is the US 500, right? So it's gone long and it's given you a little bit of consolidation. It'll probably continue on going long. But what support and resistance does for you in a scenario like this? Now, we take the support and resistance from the day chart. Now, we always go to the day chart. We always put it on a line chart and we always pick up our support and resistance from the line charts. Take it back to candles, take it back to the lower time frame, and guys, you can trade this on any time frame on any product. I've had many a person ask me, will it work on this? Will it work on that? All you're doing is you're predicting the future. Nothing special, nothing unusual. All you're doing is trying to make a profit in the stock market. So what you're actually doing is predicting what's going to happen next. So whether it's futures, whether it's contracts, whether it's equities, you're predicting what's going to happen next. There's no difference, no matter what time frame, what product, whatever you're trading, it's exactly the same thing. And also, it's a 50-50 trade. Just because this is a lamp fall formation, it's going long and it's bullish, and just because it's looks like it's going to carry on going long doesn't mean that it will. This could give you a nice big red candle coming out here and give you a risky short trade going down. And I've actually been looking at that. I actually took a risky short trade here. I got in too early. It went back and took me out at cost. No big deal, but you get them wrong. Point being, if you trade with the trend and you see the market structure and it breaks through this resistance that you've got in the top here, goes through. The one rule that you've got to follow when you take a trade is you see the green bar. When you see a closed green bar on your time frame, whatever time frame you're trading on, which is why I put the candles in here in the first place so I can see this. When that bar closes and it closes green, you can take a long trade from there. If you get a red bar and it closes and it's come out, you can normally take a short, but as you can see, it failed there. It does happen that you sometimes get a failure. Here, red closed bar, it failed. So there's been a few failures. That's why I tell you the market's a 50-50 game. But the general rule of thumb is if you get a closed bar, then you can take that direction and go. You see, closed green bar, take the long and then let it go, and it normally gives you a nice trade. This could still give you a nice short trade. I don't know. Maybe it's just gone back a little bit and come out. The reason this trade failed for me, my stop loss was up here at 56.75. I moved the stop loss down to cost because I just felt like it was a good idea because it was a risky trade. It went back and it took out the stop loss, but it really hasn't taken out the original stop loss yet. So this could still go short. It was a red candle. That said, I do expect that it might break through this resistance and carry on to the long side. But the basic rule of thumb is wait for a closed candle. So here it breaks through here, gives you a nice red candle coming out of the, well, it broke through its support and now this becomes resistance. So you've got a nice red candle. You can carry on going short and take the short going down. Now you will often find when you take the trade that you're going to get this choppiness going along. Don't worry about that. That's why I say put your stop loss on the other side of the channel. Same goes for, like, for example, this particular trade here. You know, you've got a lot of choppiness. Now if your stop loss is down here, it's not going to take out your stop loss and then it's going to go. This as well, you've got a red candle, you took the short, choppiness, and then it goes. So here, red candle goes out, goes down, starts messing around, going back up, and you think, oh, what's going to happen with my trade? And then she goes, and off she goes, and she gives you a profit. So don't be afraid when you get a trade that looks something like that. Just going to have a look at gold quickly. And if you have a look at gold, this is in a trend. Now I wanted to show you this because it's in a trend channel. Now this is a trend resistance, very much the same as the blocks. You see every time it hits the trend resistance, it goes up. Same scenario. You get a green candle, you go long, goes up, it goes up, comes back, you get a nice green candle, you go long. And if it hits the top and you get a red candle, you go short, it comes down, you get a green candle, it goes long. It's within market structure. It's up, down, up, down, up, down. This one is going to be long. You get a nice green candle coming out of here. You get a nice long trade going up to the top. Those are basic rules. Those are the easiest rules on the planet. There's no complication with this, guys. You don't have to reinvent the wheel. It's quite straightforward. Here's the euro, Great British pound going short. Why did we take it short? Big red candle coming out. Take the short, put the stop loss up here. What have we done now when it's all the way down here? We've moved the stop loss down, and we've even moved the stop loss down from break even to profit. We moved the stop loss to fit much further down to these levels around here, and now you're actually making a profit if it goes back in the other direction. So you can't take a loss on this trade anymore if you took the trade at the right position. Basic rules, guys. Just wait for a confirmation candle when it comes out of the area. Once that candle closes, take your trade. Doesn't matter what time frame you're on. Use that scenario and then you will be profitable in the stock market. So I hope that helps you. I hope that sends you in the right direction. Now let's go and have a look at what 50-50 trading is all about, and we'll take it from there. So now that you know the charts, now you've seen how the charting system works, and now you're moving along those lines, so to speak. Let's talk about why trading is a 50-50 game. The whole point here, guys, is you have a 50% chance of winning in the stock market. You have a 50% chance of losing in the stock market whenever you take a trade. No matter what your system or which guru gave you the 90-10 system or which belief you have that you can turn $100 into $1 million, whatever system you have, let me tell you right now, the honest truth is you could lose in the stock market. There's a 50% chance you could lose in the stock market. And in fact, the best traders in the world don't even have a 50% success rate with their systems because they understand that the way to winning in the stock market is losing first. If you manage your risk and you understand how to lose, then you understand how to win. What we all do in the stock market is we all follow our losses and we don't follow our wins. We're all too scared to add to our wins, but we're not too scared to add to our losses. Strange thing that, isn't it? Why would anyone think like that? I don't know, but that's how the human mind thinks. We've got an inbuilt fear in our mind. If we're going to profit and we see a profit, our brain tells us we need to get out and take that profit because we're scared to lose that profit. But in fact, you haven't actually lost anything yet or won anything yet. You're still in the trade. What are you looking to lose or win? So if you stay in the trade, there's a good possibility you're going to make a hell of a lot more money from that particular trade. So I find that kind of crazy. Once you switched your mindset around, you'll understand what I mean. Because you can simply move your stop loss up to cost and you haven't lost anything. You haven't lost a cent until it actually takes out your stop loss and then you've lost nothing. So the reason it's a 50-50 game, guys, is because everyone in the stock market believes they've got an edge. Everyone in the stock market or in the Forex game or in trading, let's say trading, thinks they've got an edge. Everyone thinks they're going to win when they take a trade, because that's why you would take a trade. You wouldn't take a trade hoping that you're going to lose. You're going to take a trade hoping that you're going to win. That's just natural. So every single person out there takes the trade and they buy. And then the next person says, well, I'm going to sell because it's time to sell now, and or I'm going short, or whatever the case, because I believe that my system's telling me that this is a sell and your system's telling you it's a buy. So both of you believe you've got a 70 or 80% chance of winning, but at the end of the day, you've both got a 50% chance of winning, because both of you might be right, both of you might be wrong, but one of you is going to be right, because one of you is going to make a win on your buy or sell. Only one of you can win. Both of you can't win from this. And as sooner you understand this, the better. It's a market. People are buying, people are selling, and both people believe that they have the edge. Our edge is the price action, the support and resistance that we've gone through on the charts. And that edge will help you. But what it actually helps you with is it helps you to manage your risk. It helps you to understand that when you take a small loss, you get out. So you figure your trades out. Every single trade, you say, every trade I'm going to take $500 limit loss, no more than $500. But on every trade that I win, I want to make at least $1,000. Then you know that you're going to be in a profit at the end of the day when you win. That's about as simple as I can put it to you. I hope that's going to get your mindset into the right sort of frame of mind when it comes to 50-50 trading. Oh, I told you you're going to get a free gift, didn't I? Did I forget to give you the free gift? Yeah, free Forex book down in the description. Go and get it. It's all about trends. It's a PDF. Go and download it for yourself. Totally free. I'm not asking you anything for it. Go and have fun. And then on top of which, I put the trade of the day out every single day. And it's just a trading idea, not trading advice, but it's there for you guys to enjoy. If you remember and you've joined the channel, then you get a video every day. And you also get all the trade, buy and sell, which way they're going and that sort of thing on the community tab. That's just on the house. It's just there for you guys to enjoy. So don't forget to come back and watch the next video on Friday, which is going to be all about what I wished I knew when I started trading. I wish I had all this stuff and all this fancy information and what have you that we've got now. So that's what Friday's video is going to discuss. We're going to discuss all those things that this old toppy didn't have when he was a kid. So guys, thanks for watching. Don't forget to come back for that video on Friday. And until next time, cheers, thanks, and bye.